Ladies
This
and gentlemen,
conference will now be recorded.
good evening, ladies and gentlemen. This is Cruise Trading Frank. It's approximately 8:42 p.m. on March 11, 2019. This is a strategic uh, weekly update on markets, individual stocks, a couple of comments on the broader picture, as we always do. For newer members, keep in mind that these sessions are recorded and uploaded to the Google YouTube channel for viewing at a later time. Do spread the word around because there are some unbelievable resource and amazing actionable info that's are in these strategic video casts that are uploaded for free on the Clueless Trading Google YouTube. We also have a terrific Instagram channel that I've explained many times. It's very important for all active traders or anybody out there, especially our members, because I highlight some significant um, options charts, which I don't always get a chance to show in the middle of the day. These are uploaded to the Clueless Trading Instagram channel, approximately around 9 or somewhere between 8 to 10 in the evening Eastern time. And these are trades that we have put in place, trades that we have done, and then I went go ahead and show the options charts on those particular trades. So for somebody thinking that this is just for fun, well, they're being completely idiotic if you ask me, because in one single soup in 30 seconds you get a chance to see the highlights of what we did for that particular day. So if you have any inclination to be a semi-serious trader, and hopefully benefiting from my hard work and my precision content, then you certainly need to subscribe to the Instagram channel and pass the word around. We are closing into, well, not that close, but getting close to about 500 followers and over 500. The algos at Facebook pick it up and run with it. So we certainly want to be in the thousands of follower camp, and your help is very much appreciated. Okay. On that note, let us begin. Full disclosure, this is purely for financial education, not for any solicitation or advice. So today was not unexpected. Today was what we were expecting based on the tactical charts, based on the indicators, and what I've been talking about since the fallout last week. This is the chart of the market from last Monday. All right, this was Monday morning. This was Monday morning at around 8:45, 9 in the morning. This is where the market opened, and this is where we are on Monday morning today. So before I get into the technicals, a couple of broader pictures. There's nothing really that happened to have precipitated a 200 plus point rally, other than the fact that retail sales were stronger than expected, which is always a good thing. We didn't have any blowout negative stuff coming out of the Globex markets over the weekend. There were not any wild tweets coming out of good old Donald, President Trump. There was some talk of kind of moderate, impartial news about goings on in the U.S.-China trade talks. In fact, there was some negative vibes coming out of the South China Morning Post, which reports directly on Chinese affairs directly from the ground out there in Hong Kong, I believe, right next door, and that trade talks are going well, but they don't have a date set for the big shots to meet. I mean, President Trump, Premier Xi. So there was really nothing out there which would have precipitated a solid rally. There was one positive aspect that happened on Friday evening after the market closed, which was our terrific Fed Chairman Jerome Powell. And despite the repeated attacks on him by President Trump, which I do not agree with at all, to be honest with you, you don't go around attacking a Federal Reserve governor. I'm sorry. You can make some comments here and there, but you can't be like, he likes this, he likes that, he likes to QT and all that. I think that's wrong. That's just my opinion, as you all know by now. So bottom line is he said there was no need to hurry about interest rates. He takes into account the slowdown on the global economy, takes into account the slowdown in the U.S. housing market. He sees that this U.S.-China trade friction is not doing anything good for a significant amount of U.S. companies, and agricultural companies as well as corporate companies, which are starting to feel the brunt of these tariffs and all that stuff. So, he believes the negotiations will have a fruitful outcome, which I believe too. I think the Trump trade team is doing a pretty terrific job. But the sooner they wrap this thing up to a certain degree, the better for everybody. Believe me when I tell you. There was also some talk about the fact that, which I always consider to be positive, that the Brexit situation, about the UK leaving the European Union, that might be delayed. Overall, when it comes from a business standpoint, forget the political mumbo jumbo. From a business standpoint, that is a plus. Even though hanging in limbo is not a plus, but a no deal Brexit is a disaster short term. Okay, markets are going to fall hard, companies are going to scramble, all kinds of stuff will happen. But a delay, a negotiated delay in how to do this Brexit properly is a plus. And if there is and if there's a referendum where the Brexit situation is pushed aside, that net for the markets is a plus. Okay, I don't want to get into the political diatribe of all that stuff. So saying all that, there was no one particular trigger. In fact, there was one very negative trigger, unfortunate crash of the Boeing 737, which where 157 people perished, including 8 Americans, from Ethiopia to out there. And this is a new plane. This is the 737 MAX, I believe. This is known as the workhorse, and this is the best-selling aircraft that Boeing makes. The highest volume. I think it garners about 1/3 of Boeing's revenue. That was the second crash in a couple of months. The first one was Lion Air. That was also a 737. So Boeing was down huge. So you would think Boeing's down huge. The Dow Jones futures are opening down 200 points. NASDAQ is doing fine because there was some corporate takeovers and stuff, and things were very oversold. That's what we're going to get into in a minute. But you'd think, oh my God, the market would be down. Well, I called it again because the market was up 200 points. So therein lies the power of tactical, technical signals and trading. This is what I try to impress upon all of you children, because we are all children of the markets. We're all infants. In fact, adults are like big diaper babies when markets go topsy-turvy. All of a sudden, the common sense of a 30-year-old man or woman, or a 40-year-old man or woman, goes thrown out the window, and they start acting like wild monkeys on hot tin roofs. Well, what we do here at Clunacy Trading, we try to tamper down that type of behavior. We try to keep our emotions in check, and we try to look at the charts and say, okay, what is exactly going on here, and what should we do? Well, what we should do garnered humongous profits for hopefully a good number of our members today, because they set up some trades on Thursday and Friday. And therein lies the picture. So let's get into the technicals and wrap this up fast. All right? How about that? All right, let's get there. Like we say, let's get to work. So here we have last Monday. Okay? And here we have last Monday. Complete flash crash. Don't want to get into reasons and stuff, just showing you the visual aspect of it. Then the markets rally, and by midweek, the markets start to slide down. Attempted rally, slide down, and then the markets basically by the 8th, which is a Friday, markets hit close to a bottom, and then they start rallying. The close on Friday looked extremely positive because we were, if I remember correctly, we closed right here on Friday, right here. All right, that was your Friday close. So it was already turning out to be a nice inverse head and shoulders. We were net buyers here. We were net buyers here. We were net buyers here. As you all know, you didn't see me go out there and say short, 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 short. Intraday short, sure we did. Made some money. But not these type of like, okay, let's go short over, over the weekend. The things are just horrible. All that dogmatic bear stuff. You see that all around. I'm sure many of you follow other services. StockTwits, the free service, the platform, terrific platform. Overall, everyone's bearish. Little voice in your head is bearish. You're all scared. The market's going to just collapse. Yeah, la-di-da. Well, none of us know. That's the reason why we follow our charts. And we're going to go through the longer term charts too. Because our opinions and feeling are just meaningless. They're worthless. So I hear a lot of traders say, oh, I know the market's going to pull back. Yeah, really, you know the market's going to pull back. Just the way you knew since 2009 that we were going to be up a gazillion percent, and that since President Trump won the elections, where everybody said we're going to go to hell in a handbasket, and I go listen to my video cast the day after and the day after, that we were going to go up what we call, the market was going to ramp. Like, what did I say? It was going to be Brexit on steroids. That's my term. Like in Brexit, the market fell, then they rallied like a monster. I said, we're going to be, Trump's election is going to be Brexit on steroids. Well, we're dead right. Now, nothing goes up in a straight line. There's always volatility on the way up, pull back, but general direction I'm talking about. So none of us know. So more you stick with let's put it this way. Clueless trading is not just about technical charts. It's about a mental calibration procedure, okay? It's almost like a mental intervention. So it's hard. It's hard to change your dogmatic biases, what we call cognitive biases about the market, about life, and about stock markets. Because you might have been hurt before by the market. You think the market is always there to hurt you. Not really. But the market's not always there to be your buddy either. If you don't understand the tactical nature of the markets, which we display in the form of these unbelievable charts, then the markets will hurt you. And they'll hurt you on the downside, and they'll hurt you on the upside. Because on the upside, the way they hurt you is, number one, you were short, you got blown out. You're scrambling around like a monkey in a hot tin roof, not knowing what to do. Two, you did not participate in the rally. That itself is hard. Because what you don't make is what you lose. Never forget that. So this is about mental calibration, ladies and gentlemen, all right? And the more you become a tactical trader, the lesser you rely on your emotions, which are worthless. It's a fact. And I didn't make this up. It's a fact. And the better off you'll do. Because you will start to think on a robotic manner. Of course, your feelings and opinions are always going to be there, but you're going to give it lesser weighting when you're doing this type of business. So I hope that helps. Let's move on. So bottom line is, we had this. We started off. This is where we closed at on Friday. Yeah, somewhere around here. We dipped a bit on the Globex markets. Forget all that stuff. We started the day and we just started ramping. We just started ramping. If you were short, and I hope none of you were, then by 8:15 you really need adult diapers, because you're done. Because when you see a ramp, these candles going off like that on the 15-minute, and the hour candles will show obviously a stronger green, you're like, you just cover your shorts and you start going long, 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 long. In the meantime, what you're long on this side, you want to take some staggered profits. That's natural. I put that out. Take full or partial profits. Keep a core position. Re-enter that position. But at least you got to cap that profit, because you don't know whether these levels that are being engaged with these red arrows are. These are exact geometric pattern symmetries, algorithmic pattern symmetries. Inverse head and shoulder, head, left shoulder, right shoulder, neckline, 50, Fibonacci 50% retracement. That whether or not at those levels the market's going to suddenly turn around. We don't know that. If it's going to bust a move above that, that means something big's going on. You know what something big was going on? Not that there was anything huge on the story front. One, it was a monster macro technical short squeeze. It was a SS. It was a short squeeze. And the short squeeze was because I'm sure there was a bunch of technically oriented, macro oriented, automated hedge funds who were short. They were short the market. There's a fund called 2 Sigma. They always short the markets. The only time they made some really crap load of money, I think billion plus, was when the market collapsed back in February of 2018 and October, I believe, when the market pulled back. So those type of funds got decimated. So they're all scrambling. And when they're scrambling, and this is the reality of what happens, not the garbage you hear at CNBC or Fox Financial News or even Bloomberg, even though I keep on saying Bloomberg is a little bit more moderate and more factual. Not the garbage you hear. They're not the voice that tells you like, oh, the market's going high. Oh, yeah, yeah. Well, not, because this is the internals of what goes on. When you see a move like this, ladies and gentlemen, this multiple sharp 90-degree angle up. These are all automated short squeezes, just the way this was a complete flash crash. Okay, mini flash crashes. And you see the pattern symmetry. So once it broke out over the 50 Fibonacci 50 level, you just use my charts to use your brain and use your money to make money. You don't even need my alerts, because the charts itself are worth thousands of bucks in your pocket, hundreds of bucks in your pocket. So like I say, it's time to grow up. So bottom line is, once you cross the 50, which is around 27.69, it's all clear as day. Then you can buy. The next level gets breached, then the next level, and we hit Fib 78% at the close. Went above that. And it looks likely that given the ferocity of the move, that from a technical estimation would be that we hit that 28.18, which means we hit the 28.20 mark on the S&P 500 as early as tomorrow. Yeah, that's only 100 to 120 points to complete this pattern. And then we hit, bam! Hear that? Bam! A wall. And you know what that wall is? That's the wall that the market is attempting to break. The big wall. So let's take a look at the big wall. All right? Because once that big wall comes down, I don't know if it's going to come down. Hopefully Donald delivers some good stuff coming out of China. Because that wall, that ain't the Great Wall of China. That's the Berlin Wall, all right? That you need to cross in order to go over to the other side. And that wall, ladies and gentlemen, is right there. So, I'm sorry, right here. That's the bigger wall. That's like when the Berlin Wall fell and everyone rushed into, West Berlin. Like, oh my God, look at capitalism. We love it. Because East Berlin was nothing but a bunch of commies, right? Starving their own people. So this is the wall, right? We know that by now. This is the macro chart. So instead of putting all those little voices in your head together and dancing with them, how about taking a very good look at this chart and let's talk about what might happen. How about that? All right? That's a good proposition on my part to help you guys make money. So this is a major, as I've said, wall. And we have attempted since last October. It's been 1, almost 2, 3, 4 times we have attempted to break that great wall of resistance, and we have failed, which is roughly around 28.16 or so on the S&P 500. So as a technical forecaster and a tactical trader with a very high accuracy rate, we here at Clueless A Trading look at it in a very mechanical way. What is this pattern? A bull will say this is a rising wedge, a consolidated pullback which lasted 4 days. On the 5th day, it bounced off the nice gap. That's what we played. And then it bounced back towards the over this white line here, which is your 200-day moving average right there. And keep in mind, the 200-day moving average is still moving sideways through all the shenanigans that happened since last October. It's not buckling. It's not crashing down. The 200-day moving average is just going sideways. So when you hear those real dogmatic grizzlies out there, including some voices in your head which tells you, oh my God, it's all over. This is it. This is it. The U.S. economy is going into recession. Blah, 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 blah. President Trump's business regulations and everything he rolled back and all that, nothing's going to work, blah, blah, blah. But look at the 200-day moving average. Is it telling you something? Yeah, it's telling you that despite all that huge volatility, it's still moving sideways. So the 200 day is a very, very important number. Okay? So a bull will tell you that this is a rising wedge, a consolidated pullback, and now we're back on the horse again. Remember what my charts that I showed. Can somebody, I'm not going to even bother asking because, but I'm sure somebody knows. What is this? What's a term that I used for this just last week? It's a bull flag. We know that. It's still a bull flag. Bull flags look like this. Bull flags can look like this. Bull flags can look like this. Bull flags can look like this. I mean, they'll repeat it. I called it the galloping horse pattern, which brings me to my next point, and I just want to make this very clear. If you're not really tracking my real-time Twitter feed, which is a huge gold mine of tactical alerts, comments, information about the market written in simple English, plain English, then you are doing yourself this favor, not me. All right? So, again, we call this a galloping horse pattern. Why did I say that? Because that's what I used to call it a long time ago. It looks like a galloping horse. And I showed that chart, which was, this is it. So here's your thing, and there you go. Remember the little galloping horse when you're little, sitting on that? All right. So bottom line is that the bull flag is still intact, and the upper end of the bull flag is just around the corner, which is 2,800 and 2,880. As tactical traders, we trade these levels. We're not sitting here wishing that the market goes to 2876 because we don't know if it's going to do that. This wall might turn out to be a very formidable wall, which again crashes the market. And if it breaks below this 27 level, this gap level here at 2720 around this level, then we're going to fall lower. We're prepared for it. So let me show you the bearish pattern. The bearish pattern is that we have a monster inverse head and shoulder with a very, very defined. Now this doesn't happen in one day. It can. If Donald can't pull off the U.S.-China deal, we're going to be down 1,000 points. Mark my words, or more. Just like that, boom. It's not going to do anything politically for President Trump, and it certainly is not going to do anything for the markets. But I think he's making a lot of good headway because they seem to be eating the right food, if you read that article. All right? And they seem to be smiling. So anyway, the bottom line is that this macro shoulder is 2,600. So if you fall from 2,800 to 2,600, that means you drop 1,400 Dow points real fast. Can it happen? Absolutely. Absolutely. If there is no China deal or there is a no deal Brexit, or a combination of both, will drop 1,500 to 2,000 points within days. So get ready for that. Get ready for that. It doesn't matter what freaking stock you're in. They'll just pull it down. There's going to be a mass exodus. Stops triggered. Margin calls. All of you back in hiding. Chat room, no one there. And it'll also set up a very opportunistic buying opportunity, which is basically around the 2,600 level on the S&P 500. That's 1,400 points lower, by the way. From here on the Dow Jones Industrial Average brings us down to about 24,000. All right, so be ready for that. Can happen. My gut estimate tells me that it is not going to happen in March. Why? And listen to this carefully because it's money in your pocket. And money that you guys are not making, or some of you not making, because you're sitting there, I don't know what you guys dreaming of, okay? Because perfect moments are coming almost every day on multiple precision trades that have been put in place. But that's not my job. Your job is to make money. My job is to basically show you how to do it. After that, if you remain to choose stay poor, like a lazy socialist or a communist, then feel free to do so, So bottom line is that my feeling is that they will end the quarter, the third quarter of I'm sorry, what am I saying? The first quarter of 2019 on a strong note. Because after all, it's also about bonuses and stuff, right? Institutional money managers need to get paid. We're a capitalist society. We don't do things for free, even though I give a lot of stuff away for free. So the bottom line is that I think that they're going to end March on a good note. We're going to go into April, and we're going to see a real thump in the market right at around after the first week of April, right around tax day, right that week of tax day. I've said this before in a whole bunch of years. I've been dead right. So we still have a run-up into this, and I believe the market will somehow attempt to break out over this Berlin Wall, this massive wall of concrete at 2816, 2820 on the S&P 500, and attempt to go up towards this level. Other charts are showing that. Now, internals are cooperating with that. We are starting to turn around on the McLaren oscillator. That's a good sign. Remember another thing. One of the reasons I got so bullish and I started to buy last Thursday and Friday is because this McLaren oscillator at one point had hit 300 and minus 300. That's a lot. My advanced coaching session students who have spent a few bucks to learn the real mechanics of how to manage their own trade. It's not about getting into a trade. It's how do you manage it? Making pennies on awesome trades that go up a gazillion % is not the idea of a good trader. Yeah, you might tell yourself in the head, oh, I made some money. That's good. No. That's childish stuff. Okay, when you leave 300% on the table and make 20% or 30%, that's complete stupidity. So if you want to be a trader like that, that's fine with me. So in order to really manage the trades, and when it comes to trade management, I certainly teach a lot of the mechanics of it on my advanced coaching sessions. So feel free to sign up in the group sessions and see the difference it makes to your own portfolios or P&Ls. So this is looking good. This is starting to look good. So this tells me that there is a shot. Oh, that I was telling you, we got so oversold. Look at the McLaren oscillator. I mean, sorry, the slow stochastics. Even a child can read this. I'm not trying to offend anyone. I'm just trying to make a point. Even a child can read this, okay? We got so oversold. This was back in December 24th. We got almost the same oversold on a minor 3-day, 4-day drop. So what the heck was going on? What was going on was massive capitulation selling, massive negative headlines from the media, and there was a big bargain basement sale that was going on. Okay? Of expensive products like Google's, like Amazon's, like Tesla, like Trade Desk, like Netflix, like Apple, not to mention all the other stocks. There was a massive sale, fire sale. And this showed it. The S&P showed it. That they got almost as internally as oversold as December 24th, which was the Christmas Eve massacre. Ladies and gentlemen, why is that so difficult to understand? So you gotta buy hands down. Now you don't have to go nuts, but you gotta buy something that makes a difference to your P&L, to your wallet. If it doesn't make a difference to your wallet and repeatedly you're not doing it, DM me, direct message me, get in touch with me. You know, I give out these complimentary sessions. I did 2 of them over the weekend to help, go back to the basics. Go back and slap yourself a couple of times to get out of this moronic state of affairs that some of you are on. Seriously. It's not hard. So this is definitely telling us that it got that oversold. Oh, Lord. Didn't I tell you we're going to have a massive rally within 24 to 48 hours? I said that on Thursday. We had a rally on Friday where markets were way down, 200, 300 points, and went almost positive, called it. I don't call it just because I'm some sort of magician. Yeah, I'm a magician when it comes to reading my charts and reading the overall gut emotional feeling of all of you and the markets. Yeah, I am. But I'm not a magician like, oh, it's everything will go positive. But the charts were telling us that. Not some complicated chart. You guys can see this. If you have young kids, they'll be able to read these charts better than you guys can. So bottom line is, this is good. So if this continues forward and starts to get overbought again, then that should jettison us up towards this 2850. Even 2880 level, close to 2900. Some good solid vibes coming out of the U.S.-China trade talks or some sort of framework of a deal will take us there. Some sort of moderate Brexit delay or anything non-negative Brexit type of situation will take us there. We're going to jump 300-400 points, easy. The momentum itself from today should take us somewhere in that 2820 level by tomorrow. I hope I made my point because I can't do it anymore. I mean, I can't explain anymore. All right, so this is your intraday chart. You use this as a roadmap to do what you need to do. This is your 1 hour chart, which is killer. This is a complex volatility chart. Every level is defined in the form of Fibonacci retracements. Here's your 50 fib and downtrend lines, falling wedges, massive breakout, and now we are heading back towards the Berlin Wall, which is right there. Nothing to see here, right? So we'll hit resistance here right off the bat around 2803, and we'll hit resistance again here because that was the last level of major selling back on 25th. That's why these lines are drawn. These lines are not drawn there to make the charts look pretty. This was the sudden breakdown in the market right there on at around 9 o'clock on the 4th of March. Last Monday, the start of that flash crash. And the markets could very well might want to go ahead and retest it. And if it retests it, it's not going to be a straight line through it. I doubt it. I'm sure there's going to be a massive, another big sell program that hits right around there. Will it be another massive 200 type of point drop, 150 point drop of drop immediately? Maybe. Bear with me. Back. So those are your tactical roadmaps that you can utilize from a swing and day trading perspective in order to manage all your positions, specifically the SPYs. And if you're a futures traders, of course, those charts are gold mine. This is your daily chart, still looking good. This is one heck of a massive hammer. Every single time, and I've showed this repeatedly, we have had little pullbacks. We have had a big breadth thrust candle, lots of volume, 2-to-1, 3-to-1, 4-to-1 advanced decline lines. And today happened despite Boeing, which, yes, came back a lot from a low of 365, 366, came back to 400. But so today was special. That Boeing was still down 23 frigging dollars at the close, even though it came back a beautiful $37 from the bottom. It was still down $23. And respect the power of the statement. And we were still up 200 plus points, green across the board on multiple alerts put out there, especially the tech side. Right? Today was a massive tech day. So it has to be said something. So every single time that we have had these pullback, and this one lasted roughly 4 days. 1, 2, well, on the E-minis, it actually lasted 1, 2, 3, 4. Yeah, on the 5th day, this is what happened. And Friday was a hammer. So all this is looking good, technically speaking. We came back, retested the uptrending 34-day moving average. I've talked about this repeatedly, shown you guys, written in simple English. So you guys can walk through it. And some of you do read those comments, do understand what's going on, and do tend to do better than others when it comes to trading. So that's what it's all about. So bottom line is that here's your Berlin Wall at that 2820 level, and this is on the S&P 500 futures. If we break above that, that's the next level of contact where the big breakdown started on the massive 1,200 point drop on the Dow. If I remember correctly, not 1,200, 600 plus point type of drop that was on October 10th, 2018. Now the same chart displayed here very clearly is the S&P chart, so we don't need to do any conversion by a couple of points when we are converting the minis to S&P 500. This was the gap. It filled the gap, slipped below the gap after hours because of the Boeing thing, and then this was today. Very powerful. Upper end of the Bollinger is back to the Berlin Wall, 2819, right there. This is the SPX GAN fan. What's the next GAN? Right here. This was GAN number 4, right there. Follow this line. Don't get hypnotized. Just follow it. Right there. So that was resistance on the 4th, last Monday. Every time, and I talked to you guys prior to last Monday on the Sunday webinar, I mentioned to you guys, once we hit this level, you are going to see a pullback. Now, whether the pullback was going to be 400 or 500 points, that is hard to determine. But there will be a pullback. And that's exactly what happened. The pullback accelerated, freaked all of you out, freaked the world out. The media got all excited about another bear market. All these high-paid talking heads, complete morons, telling us it's over. And then this happened. So this was the 5th. This is your GAN 4. GAN 8, right there. 8/1 is up here at 2880. And isn't the 2880 level what we looked at right here? Close to it. Yep, 2890, 2880. So that's how it works. So if we bust a move on some China framework deal and stuff, we are going up to around 2880. So be prepared for that. On the downside, we know what the downsides are. This is a major support level right here. The lower gap, that's 2750. And I watch this like a hawk. But I don't care what trades we're in. You need to lower your exposure, long exposure. You need to go a little bit short, depending on whether or not. See, it's tough to go short when the market opens down 300 points. And I think all of you know that by now. I know all of you are like really dead scared. Oh my God, look at the market is down 300. Like, so I just sit back, take a breather. I've explained this very clearly on my weekend, the basic webinars I put out there. Take a deep breath, wait half an hour. All right. And if your market starts to see a reversal, you're going to have the best day of your trading life because you're going to play those reversals. And if you're not playing the reversals, then you're being completely moronic. Sorry, just say it the way I see it. All right? Because these reversals are big money. They're a gift. But when markets open down 300, it's tough, and all the indicators are like deep plunging into the oversold level, then it's tough to be short. Yes, sometimes there's a follow-through. Most of the times there's a reversal if they open down very big. I'd rather be set up on the short side the day before, and then it opens down big, and you get that similar type of 100, 200% type of ROI right off the bat at 9:35 in the morning, like you do when you set up on the long side and you get a big move higher. All right? So that's what I'm looking at. I'm looking at the Berlin Wall at 2820. Take down the wall, Mr. Gorbachev. Like Ronald Reagan said. Trust but verify, right? So trust the markets but verify every move. And the only way the verification process works is through the safe trading tactical charts, period. So that's it. Next move, just showing you guys, is the weekly. The weekly chart is still quite bullish. Again, this is the level that the market needs to breach higher. Upper Bollinger is still sitting at 2880 that I just showed you. And that's a good solid 500, 600 points from here. This is all positive on the weekly internals, the simplest internal, which is the fast stochastics. Nothing there is telling us, nothing that told me either that we were going to go on a one-way crash down, other than the fact we buckled a little bit on Thursday and Friday. But so far, so good. So that's a bullish inversion. That's an inside day. We are still an inside candle. We need to, in order for this to break out, we need a candle expansion which eclipses the body of this large red weekly candle from last week. Remember the media kept, I mean, all they kept on screaming about, oh my God, this is the first 5 days of a down day in the market, blah, 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 blah. Even though, technically speaking, Friday was an up day from a technical perspective, even though the Dow ended down only 24 points. Technically, all the candles were flashing buy, buy, buy. So technically, it was an up day. But numerically, it was an up. So we need an expansion, a huge candle expansion to take this out, because this level is a formidable level. Because when you try to cross that wall, when people try to cross the Berlin Wall and go into West Germany for hopes of capitalism and freedom, they were shot, right? So a lot of bulls will get shot if they're not careful when we enter this zone. All right? I don't mean it. It's a figurative speech. Somebody's like, oh my God, he's talking about shooting. I'm talking about long positions getting shot. How about that? I have to be politically correct these days. So that's it. The weekly's looking all right, but we need candle expansion. And I still think, based on what I see, midweek we're going to see some turbulence like we always do. So midweek is coming up. The 15th is coming up on Friday. So I would say by Wednesday we start to see the turbulence, which might last for a couple of days going to the 18th and 19th. Then we get the rush into the market coming in at the latter part of the month, starting around the 20th or 21st. And write these down. If your brain can't register these days, write them down, ladies and gentlemen, okay? Is going to be the run-up into the end of the month portfolio markups. Buy those heavy-duty trade desks of the world, the Carvana. Show them in the books, because the portfolio managers want to show when the quarterly reports go out to all of you mom and pop out there and other mom and pops out there. And I come from the mutual fund industry. My first career was a Putnam Investment. My first job is you need the quarterly reports. Must show these names in there so it looks impressive. Even though they don't own it, they'll buy it at the end of the quarter just to show. It's called window dressing. All right? Happens all the time. It's borderline illegal, but that's the way it goes. Just so it looks good that, hey, we own this. All right? So they're going to chase all the big monsters. This is your monthly chart. The monthly chart internally is still not in overbought territory, which goes above, 80. And we can certainly see here that this is once we get the China deal closed, and God help me, I really hope they can pull it off, okay? The Chinese need to bend a little bit, and we need to be a little bit more flexible. A little bit, and I think they're doing it. So this is a bull flag. Now, this is undeniably a bull flag. Even though we could drop to 2,700, that's 600 points from here. Yeah, roughly 500 to 600 points. It's still a bull flag. And it's still within that channel that I discussed with all of you way back. This is your acceleration channel that started all the way back in February of 2016. And if I want to put the whole thing in the picture, this is 2009, where none of you ever thought that we could do that, because all you heard in the news was the Federal Reserve sucks, they're putting in money in the economy, they're bailing out Detroit, the banks, Wall Street, blah, 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 blah. What the Fed did during that crisis is what saved America and the world, ladies and gentlemen. I don't care what your political stripes are. All right? So that's all you heard. Screaming and shouting. And from 2009, the devil's number, we were at 666 around that level. March 9th or thereabouts, March 9th, 2009. This is where we are. And in between, we have had severe multi-month correction. Remember, this is a monthly chart. Now, if you understand the history of how technical markets work, you're not going to be as scared and a chicken and not going to be diving for those diapers every time the market drops 100 points. Neither do you have to remain bullish all the time. You can be tactically bearish, but you have to be overall bullish. Why? Does this channel look like it's a bearish channel? Even a child can answer that question. In fact, we'll have children here next time who'll answer these questions. Okay, some of you have kids, bring them in and show them and say, does that look like it's going higher or lower? Their first answer is what's going to be the biggest money maker. Does this in any way or form look like we're going to go into a wild bear market? No. If levels break, yes. But otherwise, we are in this acceleration channel that started. These are all consolidative movements which have lasted a month or two. Not in a straight line, but in between. This was the massive volatility that we incurred in 2018. This is 2018, and then one second. Yeah, January 2018, big candles, and now we are trying to reverse back up towards the highs of the market. So I don't know if we're going to go to the highs of the market or not. All I know is this is a bull flag, and you can see that a big fat candle, then another one, there. And as long as this stays this way, then and we hold the 2018 break-even level, which is around 2,700, and these lines, then we are good to go. So that's it. So the monthly charts also are not projecting any material. Like I say, we haven't detected any technical breakdown. So if you keep what I just spoke about for the past, I don't know, half an hour or so, more than that. Wow, it's 9:30. More than that. Sorry, repeating myself. Then your overall cognitive bias on the market will be a bit more balanced. And despite all the emotional jumping around that happens because of the manipulative volatility that happens every day, that affects all of us, obviously. At least you'll have a more calmer head in order to manage your trades. So on that note, let me just show you two other quick charts. One is this is, what kind of stupid ads are these? Jeez. Okay. So bottom line is this is your McClellan oscillator. I haven't refreshed it. I'm doing it in live real time with you guys. This was Friday. It got to minus 66. What do I always say? Every single time you see the McClellan oscillator at 46, at 97, at 109, at 42, at minus 66, which is the support S2, you gotta be leaning long because there will be a reflex rally. I don't care what you're thinking, what your feelings are, what the guys on TV are saying. The McClellan oscillator cannot get this oversold without having a quick bounce. So let's refresh it. This was Friday. Drum roll. Somebody give me a drum roll. All right. Bingo. McClellan oscillator goes from minus 66, 67 to minus 32. And the MACD is starting to turn. And our good best friend ever, the full stochastics on the daily, on the New York Stock Exchange McClellan oscillator, devised by Tom McClellan's esteemed parents. That's one smart guy. Has now started to create a double bottom and it's going to start to go higher a little bit. What does that simply mean? Simple English. Market wants to go higher a little bit to levels that I just explained to you. Now, anything else can happen. There could be some dramatically crappy news out of China or this Brexit bullshit, that's happening in the United Kingdom. And Theresa May and her failing attempts to rally her own people or her own party. Forget about the other party. So all kinds of things can happen. But barring that type of scenario, the McClellan oscillator wants to at least go back to flatline. That means we have some room to move, which is exactly what I explained to you what will happen to the markets going forward in the next couple of days. So this was extremely powerful. We went from minus 66, and now we're moving up. And when you go to 110, you just close your eyes, you just basically bang, you just get into the market and just sit there and stop looking at the market on a daily basis for about 6 days. Or if it goes to these levels. All right? That's the biggest piece of investing wisdom that I can ever give anyone. And you're getting it for free. You are. All right? So anyway, so this is good. this crosses over, it's going to be fireworks. It is just starting to roll up. This is starting to roll up. I love things which are coming off the bottom like this. I love momentum plays when they're rushing forward, buying high, goes to a new high. But these I love. With stocks, as you all know, whether it be Electronic Arts, whether it be an Okta, whether it be any one of those type of massive reversal trades, I love when they're coming off the bottom. So it's the same thing with indicators. The last chart that I'll show you all is the SPX 533. Many of you are familiar with that. My advanced coaching students are very familiar with this. We have a confirmed crossover, ladies and gentlemen. Drum roll, somebody. Somebody should have a drum there. Okay, like a bongo drum. Like, can you hear this? Okay, I tried to do a drum roll. So you get these stochastic crossovers. You tend to have a 2 to 4 day rally. I say give it another 2 days till Wednesday. And we get up towards this level, which is the upper Bollinger crossing over the 2800 level. We could very well test that 28. Well, we know the Berlin Wall right now, right? All concrete, 2820. So our chant should be, Donald, take down the wall. How about that? Don, like Gorbachev and Reagan said, Mr. Gorbachev, please take down the wall. So Donald, come on, take down that wall. Get the deal done. Something with the Chinese. Chinese, they actually like Trump a lot. Believe me. I don't know, you guys don't quite understand the cultural nature of and the political nature, but the Chinese really, admire Trump. They were his biggest fans when he won. It's not like there's a hate relationship going on. There's just an economic tough guy negotiations going on. All right. So bottom line is that that's it. So this, we have a crossover. We should expect to see this these MACD, which went 5 days histograms. They went negative. We would like to see this shrink and they go positive. We know the routine by now. We didn't go this negative, in which case you have a much longer span of the rally, which lasts days and days. That was obviously from December 24th. Now we're talking about just maybe 3 or 4 bars higher. That should bring us towards the end of March. So that's it. So I'm not going to answer any questions tonight. It's been a long day. I have great videos on my Google, YouTube. Please follow the Instagram channel if you want to see the highlights of the trades. I'm going to be, again, working for the next 45 minutes, putting a bunch of option charts out there. Those are not real-time content. They're there at the end of the day for a quick check on the highlights of some of these things that we did. And on that note, I hope you guys find, get on the bandwagon. Like I said, you don't have to be super bullish. You certainly don't have to be super bearish. You just have to be a tactical trader. And the more you trade off charts, the better off you'll do. If you wake up every morning thinking we are going to be down 1,000 points, well, one day you'll be, you'll be right. But by that time, you'll be so poor that you won't even know what to do. Okay, so rather make some money along the way. Unquantifiable events known as black swans can happen anytime. We know that. We call them mini flash crashes, but that is not a very effective way of trading. On that note, God bless you all. Good night.